The Oxen Group Nightly. My name is Dan Ristow, CEO, President, and Founder of the Oxen Group. Tonight's Oxen Group Nightly, we'll be talking about our recap for July 7th. We'll be looking at our some of our new positions that we got in today, the market wrap up. We'll also be talking about our portfolios, Giorgio's Corner portfolio, extended value, which is our long-term portfolio, forecasting the day for tomorrow, and as always, please check out our disclaimer at the end of the video. For the market wrap up, the market continued its winning streak with its 8 straight up days for the Nasdaq and 7 out of 8 days for the Dow. The big catalyst today was ADP unemployment change. Was much better than expected, with 157,000 jobs added in the private sector versus 60,000 expectations. However, there are still an estimated around 5.85 million jobs that were lost since the beginning of the crisis. And it was good to see a beat, but it still needs to be taken with a grain of salt. And the government was nearing a deal on the debt ceiling limit, and that, I think, kind of gave a minor catalyst. At least the market is expecting that something will be done, and I think you're starting to see a little of that get priced in. Those two combinations really led to the real big update, and that was also the employment number was helped by a better than expected unemployment claim number that dropped to 417,000, which was the first major drop we've seen in quite some time after a lot of up days. But if you do look at what we see here, this is I'm a little bearish going into tomorrow because I've been bearish throughout this whole entire week, but I'm a little bearish going into tomorrow as well because you look at this unemployment number and the unemployment claims, and they've really risen significantly over the last month. And the number coming out tomorrow is going to tell you, I think, is going to be the employment change you saw in June was great for the private sector, but the non-farm payrolls and so the government jobs and the unemployment number probably less affected by the private sector number that came out today. So, but the market has continued its nonstop streak. We gained early, gapped up and gained early on the day after good data, and then late pullback. Was definitely seen in the last sort of hour. I think we finally saw a little bit of profit taking during the day, and more gains in the afternoon. I think some people taking some stuff off the table. It's a smart move, I think, going into tomorrow with, no one knows what those numbers are going to be, and also how will the market react to those numbers once we do get the confirmation. I think a lot of it was priced in today that we will get a beat tomorrow. So we've been playing to at the beginning of the week, we came out with our quarterly earnings picks for the earnings season. These are basically like monthly picks. These are some of the companies that we think are going to perform the best or be able to outperform the market over the next month to 6 weeks during the earnings season. And our top picks for this year in the large cap sector, or for this quarter, this quarterly earnings season, was Dow Chemical Company and CF Industries. We were really trying to avoid companies that had any exposure to Japan that may have seen some kind of supply issues or seen some, maybe some forecasting that might not be as good. We also wanted to avoid companies that had a lot of exposure to commodities in the sense of inputs, but companies that did have commodities as outputs were ones that we did like. And we were pretty bullish on Dow. This company is seeing a significant EPS growth year over year, combined with pretty solid revenue growth. It is around 8%. That's expectations. Stock had been consolidating support below its 50-day moving average, and we got in on Tuesday into this stock at 36.40. And we actually took a little tiny bit of it off today, a third of it off, for a little bit over a 2% gain, just because I wanted to get. We had gotten some nice movement, had broken that 50-day moving average, and it's looking very solid technically. But at the same time, we're a little worried that the market's been pretty bearish overall, and I'm sorry, bullish, excuse me, overall, and to continue to see this kind of rallies that we have been seeing, it's becoming less likely the more it happens. So we didn't want to lock in a little bit of gains just in case we do get a little bit of pullback, and we'll be willing to add to it moving into tomorrow. The other thing I really like about the stock is it's had very, very good historical performance during earnings seasons. You can see here in April, Very, very nice performance. And then we go back to January. Once again, into the earnings, very good. Out of it, not as significantly as good. And then also, you then look back to October, and you see again very significant movement into it and out of it. This has become a pattern with Dow over the last about 2 years. We've noticed this kind of pattern. They have very good historical results during the earnings season's months and tend to outperform the market. And it looks like they're setting up for another good month, and we wanted to take advantage of that. The other company we liked was CF Industries. It's got great upward price channels. If you're not familiar with CF Industries, they're kind of in the fertilizer agriculture sector, an area that has maybe been, I think, a little bit undervalued, but still has a lot of growth potential. And it's always going to have that really good growth potential, and they always seem to do fairly well out of earnings, not as significantly great into earnings. If you look back in April, not as great into earnings, but once earnings come out, they did very, very well. And then we also saw back in January kind of the same thing, where they didn't perform as well into earnings, but performed very well out of them. And then again here in October again, sorry, excuse me, performed pretty well into and out of earnings. But historically, we've seen CF has done very well once earnings are reported, and they've also done moderately well into earnings. It's mixed. But we do like the company. They're seeing significant growth. Again, I think we saw that they were going to have to meet the same kind of price to earnings ratio that they have right now, given the increase in earnings. The stock's going to have to go between 155 and 160, and it's priced in about 145 right now. So we're expecting a nice lift here, maybe before earnings or into or out of earnings. But we do think we could see 5 to 10% growth in CF this month. So. Other than that, we did get hit with a couple of weak positions today on FAZ and SHLD shorts. We took losses about a little over 2% on FAZ, which was hedged luckily on a gain we took out yesterday. And then SHLD short just broke its 50-day moving average today. Just relentless stock, went up 5%. A lot of short covering was really the key to it. There's nothing fundamentally good about this company at its current level. There was nothing that said it should go up. Technically, it was very weak. But when you have a market that jumps over 10% in 7 to 8 days, a lot of stocks, especially stocks that have higher beta than the market. And I mean, this stock only performed at 5%, but has a better beta than the market, and it only jumped 5%. I mean, this is a short waiting to happen. Just the timing was off a little bit. We wanted to double down, but we just couldn't. We took the gain. We're going to take the loss for now, and we'll look to short it again when we get the confirmation that this stock is ready to break down. Did not see where it closed actually to see if it closed below the 50-day moving average. I was flirting with it all day long. I could see it very easily breaking back through that on the downside tomorrow if we do get a pullback tomorrow, and it would be a good short, I think, tomorrow out of that. We also lost on the TLT calls. Those didn't perform extremely well. I think we lost about 25% on those. They dropped on a pullback this morning. We sold the 93 puts though. Those are doing, they're about even right now. I think that we'll probably be able to get those DK pretty quickly. These are going to they expire, excuse me, on next Friday. TLT's pretty solid at 95. In Georgia's corner, Georgia is our option credit sweat trader. He also does a little bit of other options trading, but mostly likes to do some vertical put spreads, vertical call spreads, things like that. And he lost on the diamond put spread. Was trying to call a little bit of a top on the market. We sort of went pretty bearish into this week, and probably was not a good call. Obviously, didn't follow the trend, but he has done well. He's yesterday got into a U.S. Steel vertical put spread, which did very well today, and then he's also in a GG Gold Core vertical put spread that's doing very well. In our extended value portfolio, it's actually obviously doing extremely well as of recently. Ruth's Hospitality Group had a great breakout, and this is a stock that we've been behind since it was about at $4.70, and we terrifically like it with a $10 price target in 12 months. We're getting there. We're about a third of the way there, and we're about 4 months since we made that call. So if we can get two more fractions like that, then I think we'll hit that target by the end of the 12 months. We had a $10 price target, and we sold that for the first third of it for a nearly 40% gain yesterday, and that was a 4-month holding about. So it's nice to get about a 10% gain on average month for each month. And we also added positions in Oracle and CA yesterday. Those are two companies that were in our recent. We added 12 coverage for 12 new companies from application software that included Oracle, CA, Microsoft, Salesforce.com, Intuit, and a bunch of other companies. And those were our two top ones that we liked. We also have buyers ratings on Microsoft. However, I can't get behind that stock simply just because of its historical lack of being able to move. Just the market does not like that stock. And then also we like BMC software a lot. But we decided to go with Oracle and CA over BMC. For tomorrow, it's all about non-farm payrolls and unemployment rate. I mean, if those come out weak, the market, I think, could see a significant sell-off tomorrow. 200 points maybe, a lot of profit taking, and it's going to happen fast. It's going to move quickly. But I think if they're good, I think the market will try to make it another day. I mean, there's no reason why, if we get another round of good news, that we're going to see a sell-off. I just can't imagine it happening. It hasn't happened yet. We haven't priced in and then sold off on when the good news actually happened yet, and it's happened several times during this rally. We would expect profit taking to start to occur overall anyways, because you've seen such significant gains, and with earnings coming in next week, the start of some earnings, I think we could see some profit taking coming in before those earnings reports start to come out. Typically we like to see a rally. We see a pretty good rally this next week into the earnings season, but now with such a huge rally happening before it, we could start to see a little bit of a profit taking coming off the table, with people not wanting to risk those gains they've made, given that there is some uncertainty into how well some of these earnings will be. That's all for today. Visit www.theoxengroup.com for all of our positions and results. Email us at contact@theoxengroup.com. Call us. Become a part of our 70% plus lifetime accuracy on picking stocks and options. That's